Hey everyone, and welcome to another deep dive.
Yeah, it's gonna be a good one.
We're going to be looking at Expensify today. So
Yeah.
for anyone who's had to wrestle with expense reports,
Ugh, don't remind me.
this one's for you.
Yeah, for sure.
We've got articles, we've got financial reports,
Market analyses.
market analyses, all sorts of good stuff. So we're really trying to go beyond the headlines.
Absolutely get a sense of,
Yeah.
is this a good company to maybe invest in?
Yeah.
What's really going on beneath the surface?
And I feel like this is one of those companies that everyone's kind of heard of,
Yeah.
but no one really knows what they do.
Right.
Like you say Expensify, and they're like, oh yeah, expense reports.
Right, exactly. They do the thing with the app
Right.
and the receipts.
Like I remember when they first came out, I thought, this is brilliant.
Oh, yeah. Such a game changer.
Take a picture of your receipt and it fills it all out for you.
Total game changer. But, what's interesting is they're kind of moving beyond just being a software company.
Oh, really?
Yeah, they're getting into corporate card programs.
Yeah.
They're even starting to do travel booking.
So they're becoming a financial player almost.
Exactly. They're trying to build this whole ecosystem around money management.
That's really interesting.
Yeah, and their freemium model is a big part of that.
Right.
So, you can get the basic app for free.
Which would have hooked a lot of people.
Exactly. Get people in the door. And
Right.
then once you're hooked, then you can upgrade to the premium teachers.
Okay, so that's how they get you.
Yeah, kind of sneaky, but it's a smart strategy.
It's a good strategy.
Yeah, so it brings us to how do they actually make money?
Yeah, what are the revenue streams?
So the main thing is obviously those subscription fees.
Right, the premium.
Exactly, the different tiers of,
Yeah.
premium subscriptions. But here's where it gets interesting.
Okay.
They're trying to reclassify interchange fees as revenue.
What does that mean?
So every time you swipe your card,
Right.
there's a tiny fee
Right.
that goes to the payment processor.
Okay.
They're saying, hey, we should be counting that as revenue.
Interesting.
It's a bold move.
It is a bold move.
It could really change their financial picture.
Okay, so they're kind of trying to present themselves as more of a financial services company.
Yeah, exactly.
Interesting.
Trying to appeal to investors.
Okay, well, let's talk about the people who are actually running the show.
Sure.
Who's leading this ship?
So the CEO and founder, David Barrett,
Okay.
he's a programmer by background.
Yeah.
He's been with the company since 2008. So, he's in it for the long haul.
Wow. He's seen it all.
And the CFO, Ryan Schaefer, he's been there since 2013.
Okay, so that's a pretty stable leadership team.
Yeah, definitely continuity at the top.
And how would you describe their management style?
Well, one thing that really stands out is their commitment to transparency.
Okay.
They're all about open communication, keeping employees informed, even the public, about, decisions and challenges.
I like that.
Yeah, it seems to create a culture of trust,
Absolutely.
accountability.
Which you need.
Yeah, for sure.
All right, well, let's shift gears a little bit and talk about the financials.
Sure.
Are they playing it safe, or are they kind of taking risks?
It seems like they're trying to strike a balance.
Okay.
So they've been doing share buybacks, which is usually a sign that they think their stock is undervalued.
Okay.
And they've been paying down debt,
Oh.
which gives them more flexibility.
Yeah, to make moves.
Exactly.
Okay, so they're not being reckless, but they're not being super conservative.
Right, a measured approach.
Okay, so, but overall, how are their financials?
It's a bit of a mixed bag.
Yeah.
Revenue growth has slowed down a bit,
Wow.
which is, always a concern for investors.
Yeah.
But their gross margins have stayed pretty stable,
Okay.
which means they're managing costs well. And of course, there's that whole thing about reclassifying the interchange fees.
Right, which could really boost their revenue.
Exactly. So it's kind of a wait and see situation.
All right, well, we're going to take a quick break, but when we come back,
Yeah, we're going to be diving into the market's perception of Expensify.
look at their ownership structure.
Do a full risk assessment.
Yeah, and we'll even reveal a surprising insight
Ooh, a little teaser.
that might make you rethink everything you thought you knew about Expensify.
So stick around.
We'll be right back.
All right, so we're back and ready to dig into how the market is viewing Expensify.
Yeah, everyone's always curious about Wall Street's take, right?
Oh, absolutely. So let's talk about market sentiment. Is it bullish, bearish, or somewhere in between?
Yeah. Is everyone drinking the Expensify Kool-Aid?
Well, it's been a bit of a roller coaster ride for their stock price this past year.
Okay.
Some ups, some downs,
Yeah.
It's actually trading below its all-time high from back in 2021.
So some investors are hesitant.
Yeah, I think there's some cautious optimism, but also some lingering doubts.
Makes sense. What are the analysts saying about Expensify?
The analyst opinions are all over the place, to be honest. Some are saying buy, some are saying sell.
So no clear consensus.
Not really. The average price target is around $3.17,
Okay.
but the consensus rating is basically hold.
So they're sitting on the fence.
Pretty much seems like Wall Street's waiting for more clarity on Expensify's future before making any bold predictions.
Okay, well, let's talk about some recent news that might be impacting the stock.
Sure.
Anything noteworthy?
Well, their decision to pay down all their debt and repurchase shares was generally viewed as a positive move.
Yeah, that sounds good.
It signals financial prudence and a commitment to shareholder value.
Right, which investors always like.
Exactly, but there's also this class action lawsuit hanging over them.
Oh, that's never good.
Yeah, it adds some uncertainty to the mix.
Even if they win, lawsuits are costly and distracting.
Absolutely, and they can definitely make investors nervous.
Okay, well, speaking of nervous investors, let's talk about short interest and options activity.
Sure.
What are those indicators telling us?
Well, short interest has actually decreased recently.
Okay, so fewer people are betting against Expensify.
Exactly, which could suggest that investor sentiment is improving.
Interesting. What about options activity?
It's a mixed bag. We're seeing both calls and puts.
Okay, so some investors are bullish, some are bearish.
Exactly, and some are just hedging their bets.
Huh, a lot of uncertainty still.
Yeah, definitely. But hey, uncertainty can also create opportunity.
True enough. All right, let's move on to Expensify's ownership structure.
Sure.
Who are the major players holding the reins?
Well, institutional investors own a sizable chunk, about 25%.
Okay, that's pretty standard for a public company.
Yeah, but what's interesting is the relatively high insider ownership, over 20%.
Okay, so the executives and employees own a good portion of the company.
Exactly, which is often seen as a sign of management's confidence.
Right, they believe in their own company. What about recent insider transactions? Have there been any notable buys or sells?
It's a mixed bag there, too.
So more uncertainty.
Yeah, pretty much we've seen both buys and sells in recent months.
So it's hard to interpret those signals.
It is. Sometimes insiders take profits, other times they're doubling down.
Right, it's important to look at the context.
Absolutely.
Okay, well, we've covered market perception ownership structure. Now let's dive into risk assessment.
Sure.
Let's do a classic SWOT analysis.
All right. Strength, weaknesses, opportunities, and threats.
Lay it on me. What are Expensify's strengths?
Well, they have strong brand recognition, a massive user base.
Yeah, everyone's heard of them.
And their OCR technology is really advanced.
Yeah, that's a big differentiator.
Absolutely. And their platform is highly scalable. They can handle everyone from freelancers to Fortune 500 companies.
Right, they've got a broad reach.
Exactly. And they've formed some smart partnerships, which adds value for their customers.
Okay, so lots of strengths. But every company has weaknesses.
Yeah,
right?
of course.
So what are Expensify's potential weaknesses?
Well, that slowdown in revenue growth is a concern.
Yeah, investors don't like that.
And their reliance on the subscription model could be a vulnerability.
Right. If they can't attract new subscribers, they're in trouble.
And of course, the competition is fierce.
Yeah. There's some big players in the expense management space.
It's a tough market to stand out in.
So they're going to have to keep innovating.
Absolutely.
Okay, so weaknesses checked off the list.
Yeah.
Now, let's talk opportunities.
Sure.
What are the potential growth avenues for Expensify?
Well, the global expense management market is growing rapidly.
Okay.
More and more businesses are embracing cloud-based solutions.
Right. Especially with the rise of remote work.
Exactly. And Expensify is well positioned to capitalize on that trend.
So they could potentially expand into new markets.
Absolutely. There are a lot of underserved customer segments out there.
Okay, so lots of opportunities for growth, but we also have to be realistic about the threats they face.
Of course.
What could potentially derail their progress?
Well, competition is always a threat.
Right, new players are entering the market all the time.
And the existing giants are constantly innovating.
So Expensify can't afford to rest on their laurels.
Nope. They need to keep pushing boundaries.
And what about technological advancements? Could that disrupt the industry?
Absolutely. Imagine a new AI-powered expense management system that's even smarter than Expensify.
Yeah, that's a real possibility.
They need to be prepared for that.
And of course, there's that class action lawsuit.
Right, which could have financial and reputational consequences.
Yeah, even if they win, it's a distraction.
Absolutely.
Okay, so we've talked about internal threats. What about external factors like the overall economy?
Right. Macroeconomic conditions can definitely have an impact.
So things like inflation, interest rate hikes, a potential recession.
Exactly. Those things could affect business spending.
Right, if budgets get tight, expense management might be seen as a luxury.
And let's not forget about global events, things like pandemics or geopolitical instability,
Yeah, those can disrupt travel and spending patterns.
which directly impacts Expensify's core business.
Okay, so lots of potential pitfalls to navigate.
Definitely.
We've covered a lot of ground here, analyzing their strengths, weaknesses, opportunities, and threats.
Yeah, we've got a pretty clear picture of the landscape.
But the big question remains.
Is Expensify a buy, hold, or sell?
We'll reveal our final verdict in the last part of this deep dive.
And we'll finally uncover that surprising insight I teased earlier.
Ooh, the suspense is killing me.
Stick around for the grand finale.
Okay, deep divers, we've made it to the final part of our Expensify journey.
The moment of truth.
Yeah, we've looked at their business, their financials, market sentiment, even did a SWOT analysis.
We've covered a lot of ground. Yeah, their future is still a bit uncertain.
They've got a lot going for them. A popular product, loyal users, a strong management team.
But they're also facing some headwinds, slowing growth, fierce competition, that class action lawsuit.
So for our listeners who are trying to decide whether to invest in Expensify, what's the takeaway?
Don't just blindly follow the hype or the fear.
Right, do your own research.
Exactly. Dig deeper, look at the nuances, form your own informed opinion.
Think about it this way. Is Expensify a company you believe in for the long haul?
Yeah. Do you see their vision playing out 5, 10 years down the line?
If the answer is yes and you're comfortable with some risk,
Then Expensify might be worth considering.
but if you're looking for a sure thing, a stock that's going to skyrocket overnight,
This might not be the one.
investing is a marathon, not a sprint, right?
Absolutely.
And speaking of marathons, congrats on making it to the end of this deep dive.
We hope you found it insightful.
We've given you the knowledge to make an informed decision about Expensify.
But remember, this is just the starting point.
Yeah, don't stop here. Explore the source material we've linked in the show notes.
And for even more in-depth analysis of companies like this,
Be sure to subscribe to the Stock Analytics AI YouTube channel.
we break down complex topics.
Make investing accessible to everyone.
And now for that surprising insight I promised.
Oh yeah, you teased this earlier.
Remember how Expensify is trying to reclassify interchange fees as revenue?
Yes.
If they succeed, that could dramatically change their financial profile.
Really?
It can make them much more attractive to investors.
So it's a bold move with high stakes.
Definitely something to watch closely.
It's a gamble, but it could pay off big time.
Only time will tell.
And as always, a reminder that this deep dive was created with the help of AI using publicly available data.
It's not financial advice.
Do your own research, consult with a financial advisor. Make decisions that align with your risk tolerance and financial goals.
We're just here to provide information and insights.
Thanks for joining us on this deep dive into the world of Expensify.
We hope you enjoyed the ride.
Until next time, happy investing, everyone.